I'm Siam Kidd. I'm a co-founder and the CIO of DSV Fund. I used to be in the Air Force as a pilot, and I've been trading, currency trading for about 20 years now. I ran an PAM fund back in 2015, was the highest performing fund of that year. Went full-time in crypto about 2016 and haven't looked back. DSV is a crypto hedge fund. There's a burgeoning demand for crypto exposure throughout the world at the moment, but there's not many funds delivering that exposure. So yes, you could just buy the BlackRock ETF and just sit in that, but one of the things that I've always done since 2016 is always outpaced Bitcoin. So Bitcoin is this massive oil tanker of a vehicle within the crypto sphere, but there are ways that you can get alpha on top of Bitcoin. So I guess if you wanted an extra edge on top of Bitcoin returns, then DSV is the vehicle for you. So DSV is for very high net worths, institutions, fund-of-fund managers and family offices. So we're definitely not catering to the public. And I guess this should be, if you're a fund or family office and you have a high risk chunk of your portfolio, we could fulfill that high risk or higher risk chunk. Now personally, I don't see this as high risk because crypto for me is the financial arc for the chronic debasement of every fiat currency there is. So for me, this is very logical being in crypto, but I fully understand some people may see this as risky. So very tepidly and cautious. So I have deep respect for Mother Market because she has punched me in the face many times. So obviously as I said, every central bank across the world for decades now has been diluting the currency supply. So when you look at the real inflation, so the amount that M2 is going up in every CB, it's roughly 15%. So 15% per year is the global hurdle for me. So if your investments are making less than 15% per year, you're losing purchasing power and therefore losing money. So I scoured the globe for, okay, what makes at least 15% per year or 20, 30% per year, because we're not in this to tread water. And when you look at any chart and you divide it by US M2, for example, you'll see that everything's gone down. If you look at gold divided by US M2, it's gone down. Stocks, it's basically gone flat for the last 20, 30 years when you divide it by US M2. So crypto is pretty much the only thing. So when I say crypto, let's just say Bitcoin for now. And so obviously Bitcoin has its cycles. Now, coincidentally, the Bitcoin 4-year cycle is sort of superimposed on top of the 5.5-year global liquidity cycle. So at the moment, these two are in lockstep. So they probably will disconnect at some point, but everything around the world is moved by global liquidity. So basically you have to follow not only the liquidity cycles, but the crypto cycles within it. And so we have these blow off tops or the bull market every 4 years. So in the 2017 cycle, it was all about layer ones and then a little bit of smart contracts. And then the sub sort of narrative then becomes the main narrative for the next one. So in the 2021 cycle, smart contracts and the ETH killer was the main one. And there was a little bit of AI. So the 2025 cycle, which is what we're really geared up for, is the AI cycle. So if you look at global adoption, so obviously the internet was adopted by the globe a lot faster than, say, the telephone. But crypto is being adopted at a faster rate than the internet was, which is remarkable, especially as a bit of a controversial topic, crypto. Everyone thinks it's scammy internet monopoly money. But the other crazy thing is that AI is being adopted faster than anything that's ever been created. And so this 2025 cycle will literally all be about AI, the AI narrative, whether, and obviously the news articles will be OpenAI versus XAI, etc. But what a lot of people don't see is the massive grassroots growth that open source, decentralized, distributed AI platforms are doing. So we're going to be heavily positioned into AI. I'm a bit of a geek, really. I love astronomy, I like playing snooker, and I go flying. I fly helicopters and aeroplanes. So I haven't really stopped flying since I was about 16. Okay, so obviously nothing is predictable in the markets, and I can't say what exact returns that we'd get, but what I am excited about is this next cycle. So in 2017 I created a bunch of fractal cycles, and these are a predictive model which have played out perfectly. So I've been milking that model ever since, and like with any model, it will break at some point. So until it breaks, I'm gonna keep on using it. Yeah, so I'm excited about this next cycle, and that the AI is most likely going to be the real driver. But not just this cycle, the 2029 cycle as well. So there's two sort of narratives. So you have the main and then the sub. So the sub narrative, I believe, will be real world asset tokenization. So BlackRock want to tokenize the bond market and the real estate market. So I think there's a lot of plumbing and pipe work that needs to be done in general infrastructure for that to happen. So that's, I think, going to be the main narrative in 2029. So I guess for the fund, obviously, like any fund, we'd like inflows. But the thing is, ever since 2016, I've always outpaced Bitcoin. So obviously Bitcoin outpaces the S&P 500 and any conventional asset, and I like to maneuver around Bitcoin. So I measure my personal net worth in Satoshis. What is my Bitcoin worth, so to speak, and not just, obviously making ROI for our LPs, but the things that the open source AI community are building right now is just phenomenal. Everything from data compression to data scraping to compute to God, there's all sorts. And I think the general public just hasn't got a clue of the sort of the holy shit moment that's going to happen next year. So when we see the birth of AAA, so autonomous AI agents, that's going to change everything. So yeah, it's exciting.